Welcome. Today is July 8th. I'm Jeff Hughes, Chief Investment Officer at JWH Investment Partners and editor of Alpha Insights. And this is your Daily 5. We've entitled this episode Buy in July, and here's why. Now, to begin, let me first just say that this show is by definition limited to just 5 charts. But in order to really give you the full answer as to why, I would need to show you many more charts, but I'm going to attempt to spell it all out with just 5 charts today. However, if you decide that you want to dig a little deeper, you can go to my website, jwhinvestment.com. It's at the bottom of each chart and request a 30-day trial. Now, if you do, I'll send you our July issue of Alpha Insights Review and Outlook. This is a 100-page chart compendium that gives a better, more detailed explanation of everything I'm going to talk about today with many more accompanying charts. And this will be with our compliments, so enjoy. So with that, let's take a look at chart number 1. Chart number 1 is a chart that's very similar to a chart we showed the last time we hosted this show. It's the NYFANG Plus Index. Now, last time we looked at it, it was just breaking out above the descending trend line off the prior 2 highs. It has since rallied into chart resistance, or the prior high from back in February. Now, it has been coiling and basically building up what I believe to be is inertia. So basically stored energy ready to explode to the upside once we break out above that resistance line. Now, the chart, in my view, appears poised to resolve this 5-month double bottom base consolidation pattern. And that, when it does occur, should project to about 8,600 on the index. Now, today's price action, which is not captured in this chart, which was as of yesterday's close, brings the index back down to test the 20-day exponential moving average, the green moving average line on the chart. And that's actually very good. We think that establishes further support there, and also gives the index the potential it needs to really explode to the upside. So we're pretty confident at this point that once we break out above this resistance level, we'll see a relatively explosive move to the upside to approximately 8,600. Now, there's been a lot of talk of narrow breadth, and we're not here to debate that. It's a fact. Breadth has narrowed. But that's not a bad thing. We're in transition right now. Transition from value cyclical type stocks, smaller cap stocks, into growth, large cap, more dominant stocks that are necessary in order to push the indexes to new highs. Keep in mind that the top 10 names in the S&P 500 account for almost 30% of the index's market capitalization. So without those stocks participating and really leading the charge, it would be very difficult for the S&P or the NASDAQ 100 to make new highs. But the point I really want to make here is that if we look back to the rally in the S&P 500 from June 26th of last year, 2020, through September, early September, I think about September 3rd of 2020, that rally was huge. And it was unattended by the small cap indexes like the S&P Equal Weight or the NYSE or the Russell 2000 index. And that rally actually carried 19.4% before terminating. Now, the current rally off the May 12th low is up a mere 7.4%. And after today's 1.5% setback, closer to 6%. This really tells me that it's too early to start worrying about narrow market participation. So let's take a deeper dive into the FAANG index and take a look at chart number 2. What we're looking at here is the constituents of this index. There's 10 mega cap stocks. It's Facebook, Apple, Amazon, Netflix, and Google, which are the original FAANGs, plus Twitter, Baidu, NVIDIA, Baba, and Tesla. And it represents, in aggregate, over 20% of the S&P 500. If we were to throw Microsoft in there, which is not among the constituents in the FAANG index, it would be over 25%. But when I take a look at this index in general, it's clear that the established winners are names like NVIDIA, like Alphabet, Facebook, and Twitter. They're clearly dominating the FAANG index, which is up about 14.5% year to date through yesterday's close. And every one of these stocks is up multiples of that, at least double, and in some cases, triple and quadruple. Now, when we take a look at the clear names that are kind of fallen short, there's two that really stand out in my mind, and that is Amazon and Apple. And the reason that these are so important is because Amazon and Apple represent such a large component of the S&P 500 and the NASDAQ 100 for that matter. So just to put it in perspective, Apple equates to 6% of the market cap of the S&P 500. Amazon.com is 4.3, so we're over 10% of the index with just those two stocks. Now, what I believe is happening here is we're starting to see some of the big dominant leadership stocks within the index starting to reassert themselves. And it's clear when we take a look at chart number 3 that Amazon is first and foremost leading the pack. The other day, actually, I think Friday, the stock broke out and posted a new all-time record weekly closing high. Now that has been usurped in the last couple of trading days with the stock shooting up yesterday. It's pulled back some today, but still, establishing a very big upside move to, I think, clarify the fact that we have left the range that's been in place going back to August of last year. And that range, that nearly 10-month consolidation, really stored what I believe to be is a lot of energy, a lot of potential inertia that can push the stock much, much higher. Now, we can call this a double bottom base. We can call it a rectangular trading range, whatever you want to call it. The fact of the matter is we had key resistance around 35.50, and we are now definitively above that level. And that leaves us to believe that we've resolved the pattern to the upside. And with that, this pattern projects something like around 14% upside from where we are right now today, and about 20% from the initial breakout on a weekly basis. Our target is 42.25 on Amazon. We have a standing stop loss at 31.75 just to manage risk. And we would be likely to move that up as the stock continues to confirm our suspicions that it's moving higher, at least to break even at some point. So Amazon, I think, is going to lead the charge. The next name I want to look at on chart 4 is Apple. Apple, again, the largest stock in the U.S. stock market, over $2 trillion in market cap and 6% of the S&P 500, has also resolved above a lateral consolidation pattern. This pattern, very similar to Amazon's. It's perhaps a rectangle. Some might call it a symmetrical triangle. Whatever label you want to put on it, it was a range that existed, and that range has now resolved to the upside. We think with the new all-time daily closing high and the bullish reflection above 144, we can project a measured move to approximately 175. That's a 20% upside move. So 6% of the S&P 500 has the potential to move 20% to the upside. And we think that that could happen in fairly short order. We would establish a pretty good positive risk skew by using a stop loss at 133. The final chart today is Netflix. We always want to leave our viewers with an opportunity to make money on something that hasn't quite moved yet. We think Netflix has a pattern that's very similar to what we've seen in Amazon and Apple. It's something of a lateral consolidation, perhaps a rectangle, perhaps a symmetrical triangle. Either way, it looks poised to resolve to the upside. Now, Netflix represents less than 1% of the S&P 500. It's a top 25 name, and certainly within the FAANG group. So it won't have the impact on the index that the other two will, but we think that if the FAANGs move up as we suspect, they'll drag everything with them. And Netflix looks like a prime candidate to move to the upside. A bullish inflection above 560 would confirm this and would project a measured move to at least 635 and possibly as high as 700 for about 18 to 30% upside potential. So we want to leave you with that as the final chart of our daily 5. If you'd like to get more information about the work we're doing, please go to my website, www.jwhinvestment.com, and request a free 30-day research trial. Or you can follow me on Twitter at @alpha_insights. I'm also on the trade exchange as Alpha Insights. You can always find me on LinkedIn, Jeffrey W. Huge CMT, or send me an email. Thank you for watching and good luck trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.